So if you've ever wondered how mortgage rates are actually tracked by professionals, this screen and others like it are a big part of it. In another video that I made recently, I mentioned that the 10-year Treasury is one of the biggest indicators of how rates actually are tracking, not the Fed cutting them. I mentioned, that the Fed can cut rates, but that doesn't mean that mortgage rates are going to follow suit. So what does actually affect mortgage rates directly? Well, that would be mortgage-backed securities and the 10-year Treasury, which you see on the screen right here. So basically, long story short, the way that this works is that mortgage-backed securities are bundles of mortgages that mortgage companies sell to investors. That 5.5% next to it is not what rates are at right now. That's a coupon assigned to those mortgage-backed securities. And basically all that means is it's a category of them, and it is emblematic of what rates are doing. If that number goes lower, typically you'll see rates actually go lower as well. But again, 5.5%, we're clearly not at that right now. Now, for the 10-year Treasury, that's going to be your typical bond through the United States government. It's basically one of the safest investments out there. And so when you see, like this is showing today, 6 basis points down, on the US Treasury, that's showing a positive trend for mortgage rates. So it's showing that rates have some pressure to push them down due to the 10-year Treasury. And another way to kind of look at this is the 10-year Treasury is shown in its yield. So this is basically showing that 10-year bonds in the Treasury right now are going for 4.246%. Now, mortgage-backed securities, on the other hand, they are showing the proportion to what the price of that mortgage-backed security par pricing is. So the pricing for that is 101% of what its par pricing should be. So the simple version of this is, if you want to go ahead and start tracking this yourself, if you're looking at mortgage-backed securities, you want this number to go up right here. That's going to show a positive trend in the market. Now, if you're looking at the Treasury, you want this to go down. That's going to show, again, a positive trend in the market for specifically mortgage rates. Now, there's a lot to be said about what all of this means for the greater economy, but we're not going to get into that today. So if you want, you can look at it this way. The 10-year Treasury gives us direction, and the UMBS gives us a closer look at mortgage pricing. And that's why professionals watch both. If this is still confusing, or if you want help watching rates more closely from a professional, please feel free to reach out to me through DMs, comments, whatever you prefer, and I'll be happy to set up a consultation to walk you through it.